It's absolutely doable, but it's important to acknowledge that funding is going to be the biggest challenge for most people. There are 4 main strategies I can suggest that can help solve the financial problem. The first is the serial house hack strategy. With this approach, you buy a rental property as your primary residence once a year and use a low down payment loan like an FHA or a conventional, usually requiring just 3.5% to 5% down. You live in one unit and rent out the others. Then, after a year, you move out and do it again. The biggest advantage here is the low upfront cost. The downside is that it requires you to move each year, and depending on your lender, you may need to provide a valid explanation for doing so repeatedly. But if you're willing to move, this strategy can help you build a portfolio quickly without needing a lot of cash up front. The second option is standard non-owner occupied financing, which typically requires a 20% down payment. The benefit here is that you don't need to move, and you might find it easier to qualify based on the property's projected cash flow. The challenge is the cost. A 20% down payment on a $200,000 property is $40,000, and that's not including closing costs or reserves. You'll likely need to spend $50,000 or $60,000 in cash each year to keep acquiring. That said, it gets easier over time. If each property generates $5,000 to $6,000 per year in net income, that cash flow adds up and helps fund your next deal. By the time you're buying your third or fourth property, your earlier investments are giving you a very good head start toward the next down payment. Now, obviously, you will still need to source a large portion of the down payment from your other sources of income, which for most people are their W-2 job. For this reason, it's important that you continue to perform well and be a good employee for your boss. It would also be nice if, while you're on this secret financial freedom path, you're able to get a promotion or a raise that you can put toward your down payment savings. Every little bit helps. The third option is private financing. This involves borrowing money from individuals, friends, family, or professional connections who want to invest in real estate but don't want to be hands-on. Private loans are powerful because every term is negotiable. Down payments can be as low as 10%, 5%, or even 0 in some cases. Repayment terms, interest rates, and loan durations are all flexible. The challenge is that these lenders need to trust and believe in you. If you don't have any experience or a proven track record, it can be hard to get someone to invest in you. That's why this strategy tends to work best if you've completed a couple of successful deals already. The fourth and final option is a mix of all 3 of these strategies.